Ladies and gentlemen, welcome back. I hope you have watched the previous video on the second chapter, Origin and Development of Insurance in UK. Now, in this video, we will continue this chapter with Development of Insurance in India and Current Status of Insurance. Origin and Development of Insurance in India. As we know, the community-based insurance in India dates back to the ancient days, but the form of insurance which we use today was introduced by the British at the beginning of 19th century. There is some evidence that between 1797 and 1810, the marine insurance companies are established in Calcutta, which was the center of trade and commerce for East India Company. An agency for fire insurance in India was established in Chennai by Alliance British and Foreign Fire Insurance Company in the year 1825. Agencies were opened by Royal Insurance Company in 1848, by the North British in 1861, and the Commercial Union followed in 1870. By the year 1885, nearly 50 foreign offices commenced insurance business through agency houses. In the year 1850, for the first time, an Indian insurance company named Triton Insurance Company was formed to transact general insurance. In 1872, the first underwriter association was established in Mumbai. At the end of 19th century, Indian traders and businessmen in west side of India started taking active interest in insurance business as brokers. Notwithstanding the competition, the brokers found themselves confronted with problems of common nature, and in 1882 they formed an association of fire insurance agents in Mumbai. Similar associations were formed in Kolkata in 1888 and in Chennai in 1896. In 1894, the first Indian tariff for fire business was formed, followed by Bombay City and Mufassil tariff formed in 1895, followed by Calcutta tariff in 1900. At this stage, the development of insurance sector in India was influenced by the Swadeshi movement, which led to establish Indian Mercantile Insurance Company in 1907. Till the end of First World War, with the great momentum of Swadeshi movement, 7 of the largest Indian insurance offices were established. In the year 1935, a special officer was appointed to investigate and report on insurance law reforms, and in 1938, the Indian Insurance Act was passed and brought into force in 1939. This act incorporated the government control over both foreign and Indian insurances. The act became an important landmark in the history of insurance. The growing unhealthy alliance between the industries, banks, and the insurance companies had an influence on the insurance market, which led to the appointment of Kovarchi-Jahangir Enquiry Committee in 1945. With the recommendations of Kovarchi-Jahangir Committee, the Insurance Act 1938 was amended in the year 1950. The principal changes made in the Act were limitations of expenses of management, limitations of commission payable to principal agents and ordinary agents. The principal agents, however, ceased to exist from 1957. Establishment of Insurance Association of India. The Insurance Association of India had appointed the Indian companies as members and foreign companies as associate members. This association had two councils, Life Insurance Council and General Insurance Council. The General Insurance Council also constitutes the tariff committee to control and regulate rates, terms, and conditions of insurance business. The whole objective of this system is to create a collective sense of responsibilities among the insurance companies and enhance a clear control and supervision over the insurance companies. All the insurers operating in India formed the Indian Reinsurance Corporation in 1956 to provide reinsurance cover. It is mandated to all the insurers to pay a certain fixed percentage to the corporation. The reinsurance market was further strengthened by setting up General Insurance Company in 1961 as the Indian Reinsurance Corporation. The life insurance business was nationalized in 1956, and the Life Insurance Corporation of India was set up to operate life insurance business on monopoly basis. In the year 1964, the Life Insurance Corporation of India also entered in the field of general insurance. Since 1953, with the direction of the Reserve Bank of India, all Indian ships were insured. In 1958, the Insurance Act was further amended, which gave wide powers to controllers of insurance. The General Insurance Council was replaced by Tariff Advisory Committee. The amendment of Act made provisions for licensing of surveyors and loss assessors. The Marine Insurance Act 1963 of India is based on the Lloyd's Marine Insurance Act 1906, which has a considerable body of case law, customs, and usage of the insurance with some changes to suit local needs. An ordinance was passed by the President of India to take over the general insurance companies on May 13, 1971. In 1972, the General Insurance Act was passed to serve better the needs of the economy by securing the interest of community. General Insurance Corporation of India was established by the government for superintending, controlling and carrying of general insurance with effect from 1st January 1973. With the start of liberalization and economic reforms, the central government appointed an expert committee under the chairmanship of R.N. Malhotra. The various recommendations made by the committee have been implemented, which resulted in the passing the Insurance Regulatory and Development Authority Act in 1999. Present status of insurance. The IRDA Act was amended the existing Insurance Act 1938, Life Insurance Corporation Act 1956 and General Insurance Business Act 1972. The main objective of IRDA Act 1999 is to regulate, promote and ensure the growth of insurance industry and to benefit the insured. The General Insurance Corporation and its other subsidiaries to carry on life insurance and general insurance business have been ceased since the IRDA Act 1999. Under the General Insurance Business Amendment Act 2002, the functions General Insurance Corporation has ceased to carry reinsurance business only. The General Insurance Corporation of India as a national reinsurer receives 20% of share on every policy written in India by the insurer. But this does not apply for life insurance. IRDA Act provides regulations for licensing the individual and corporate agents, insurance surveyor and loss assessor, brokers, and for third-party administrators management of claims under medical insurance policies. With this, the second chapter of S01, Origin, Development and Present Status of Insurance completes. I take your leave. Until next time, stay safe and take care.